Today is Tuesday, July 21st, and this is a post-market review for the stock market activities today. The Dow Industrial Average closed up 0.6%, the Nasdaq closed down 0.8%, while the S&P 500 closed flat, barely up 0.17%. As you can see from the heat map, today was a shift from technology. Yesterday was a big tech day. Now they're shifting back from technology to the travel names, to the yield names. And tomorrow, who knows where they will shift again. This is the yo-yo game, the ping pong game, back and forth, and a lot of traders are confused of what to do. We have seen through the day a pop in the weaker name, the garbage names, like the airlines, the cruises, the casinos, the hotels, and of course, that faded off throughout the day. There was an attempt to rescue and pop up technology, but that failed. And the consistent theme of the day remains the yield hunting. You saw big day for energy, utilities, for the banks. There was some short covering in the banks, pushing them up. And of course, the last few weeks we're seeing this theme. One day it's tech, the other day it's the garbage names, then the third day they go with the utilities, and we keep switching back and forth between these names. I, of course, tweeted in the morning. I told you that you have the three choices. Let's see which one they're going to go with today. Initially, they went with the travel names, with the weaker stocks, the so-called recovery names, the so-called value names. But throughout the day, that trade started to fade. Most of it closed in the green, but it faded from the highs. And I think that the day was, of course, the yield hunting theme for the win. Now, I told you yesterday, I received nasty messages yesterday calling me a perma bear, calling me negative, calling me stupid because I am bearish on the market. These guys, of course, they're being seduced by the daily moves of the market. Last week, they were seduced by the move in the cruises and the airlines because of the Moderna vaccine headline. They bought the cruises, they bought the airlines, and what do you know? They get a smack in the mouth, and they lost all the gains right away. These names faded quickly. Yesterday, they saw the big moves in Amazon and the tech names, and they got seduced by it. They bought a bunch of calls expiring this week. And now, today, they got a smack in the mouth, and those calls lost a lot of value. I'm not a perma bear. I'm not a perma bull. I'm nothing. I am just trying to protect you here. I'm seeing the end of the cycle in the market, the last hurrah, and I'm trying to protect you from being flushed to the downside, from being pumped and dumped and left holding the bag alone. I challenged all these people who are calling me stupid to tell me which sector are they buying. Because if they're buying travel stocks or tech stocks, which one are the vaccine stocks? Which one are you going to buy now? Because they're going to play this ping pong game back and forth, and you're going to have a massive headache not knowing what to do in this roller coaster ride. And at the end of the day, you're going to be left with losses, you're going to take risks, unnecessary risks, and you're going to lose your money. This is the time to take your profits, grab a big bag of popcorn, and watch the show. Speaking of the show, let's jump right into the charts. This is a 15 minutes chart of Disney, today's representative of the garbage stocks. The garbage stocks caught a bid right away from the morning, and as you can see, they started fading and fading and fading throughout the day. They closed on a small gain, but it wasn't remotely close to the peak of the day. Here's a tweet that I put up that watch out for an attempt to try to revive the tech trade. The buy the dip crowd will try to do it, but it failed, of course. Here is a chart of Apple, 15 minutes chart, a representative of the momentum slash tech slash winner trade. It starts big in the upside and it immediately flushes down. Here is the attempt that I've been talking about 15. That worked out for about 15-30 minutes, and it's goodbye after that. They flushed it down again. Now contrast that with Chevron, the winner of the day, the energy sector. It was a big pop in the morning, and a consistent gain throughout the day. This is the theme today. This is the story of the stock market today. Before we dip into the daily charts, let's look at some headlines that we had today. The first headline, of course, was Judy Shelton. It looks like that Judy Shelton will be approved to be on the board of the Fed. She is, of course, a controversial figure only because she's a little realistic. She believes in the gold standard. She doesn't believe in all the quantitative easing and the Fed cocaine operation, flooding the market with cocaine. And now all stocks and every market is addicted to the Fed cocaine, aka liquidity. Any bad news about the Fed liquidity going out, and all of a sudden you see the market like a drug addict having a relapse and falling down. Any good news, sustained news about the Fed cocaine operation going on, and the market keeps blasting up and up and up until it can't anymore. And after all this debt, racking all the trillions of dollars of debt, we still have high unemployment. We're still seeing bankruptcies. The economy is not getting better. What is the point of spending trillions and trillions and trillions and not getting any results? The other headline that excited the market in the morning, of course, the stimulus from the EU. They're spending over $2 trillion too. 900 billion, of course, going to the southern regions, the weaker regions in Europe. Watch out right now for the news story. The vaccines, of course, didn't work. Watch out for the stocks rise due to stimulus optimism. Stimulus optimism. That's going to be the new pump and dump. Stimulus optimism. Stimulus pessimism. Right? Up, down, up, down. They're going to play it like a ping pong. Here is a map showing that the jobs recovery is slowing down in the regions hit hard by COVID-19, primarily in the south. You can see a recovery in the regions that were hit hard before, like New York. They're recovering. They're on the way of recovery. But it balances out because the southern regions are getting hit hard. Speaking of COVID, here's a headline saying that the antibodies fade quickly. Just like I said yesterday, there's no point of doing these antibodies tests and results because the antibodies fade quickly. Here's another headline that a third of Americans believe that the COVID death number is a conspiracy theory. And you wonder why we've become the laughing stock of the world. I wonder where third of Americans are getting that impression. Here are some headlines about the state of real estate. U.S. Bank Tower, the tallest building in Los Angeles, at least it was until recently, is sold because they're having trouble leasing offices. Another headline of the same story, banks, of course, they want to reduce their real estate pattern. 61% of bank executives don't expect that their workers will return to office this year. This is going to be one of the long-term stories of the post-COVID world, along with high unemployment. We're going to have high unemployment. The work-from-home culture will continue, devastating the real estate business, offices, and that will in turn devastate banks because all of these real estate businesses taking loans from banks. So watch out for banks. Yeah, they popped out today, but they will fade out and crash tomorrow. Don't chase the hot trade of the day. Finally, here's a chart of the Buffett indicator, the Wilshire 5000 versus the GDP. That pretty much measures the market cap in the stock market versus the GDP. You don't want to see market caps extended way over the GDP of the country. We are now surpassing the dot-com bubble, the all-time high. I watched CNBC today, and they were saying that this is not like 1999. 1999 was much bubbly. And here is a chart that tells you that we have surpassed 1999. It is worse than 1999. The bubble that we have right now is primarily by the biggest and largest names on the planet. In 1999, there were small cap stocks combined, lots of them catching a bid, causing the dot-com bubble to swell. Here we have a handful of names: Microsoft, Apple, Amazon, Facebook, etc., causing the bubble. we're having another too big to fail kind of situation in the market. Let's step into the daily chart analysis. Here's a daily chart of the SPY index. As you can see, we popped in the morning a little bit and then we closed flat. It was pretty much a nothing burger day for the SPY. We're still challenging these levels where we got rejected before. I'll turn the line for you. Here it is, approximately at this level. We surpassed it by a little bit, peaked a little bit. The weekly close will be what we're looking for. Are we going to close above the line, weekly basis, or are we going to turn around and close in the red, below the line? That would be very bearish. So we will keep an eye for the weekly close. Here is a daily chart of the Nasdaq, the Qs. Of course, you had this big day yesterday, and now we've reversed from the same levels that we reversed from last week on Monday. This is a 15 minutes chart. As you can see, we reversed from these levels. We reversed again from the same level. Of course, jokingly, I made the thumbnail that this is the middle finger pattern. There is no middle finger pattern. I'm just mocking these voodoo scientists that you guys listen to on YouTube, the technical analysts who come up with the pig pattern, with the smoking gun pattern, with the donkey pattern, with the Tiger King pattern, and they make some conclusions in the market based on that. But hey, the middle finger pattern might have something behind it. All the traders who bought the Qs yesterday, who bought calls on the Qs expiring this week on the tech names because they got seduced by the move yesterday, they got a nice, big, fat middle finger today. Here is a daily chart of the VIX, one of our favorite indicators. It closed about 1.5%, not a big day, but again in the green. And it's experiencing here some support. This is the level that I identified in or around this point. It got supported once, and it looks like it's being supported again. The VIX, a pop in the VIX, of course, will mean bad news from the market. A lot of geniuses the last few days said that the meltdown in the VIX is an indicator that the stock market will pop in its bullish news for the stock market. I have a contrary opinion about that. I think it is a sign of complacency. I think the people who are holding stocks right now and buying stocks, they're not buying protection. They think the market stunks, just go up all the day, all the time. They're not buying protection, and they will get caught red-handed when the market turns to the downside. But we will see how this conflict in the VIX will resolve in the next few days. The story today pretty much was about precious metals. Here is a chart of the GLD, a proxy of gold. Gold been on a tear since before the coronavirus situation because of central banks buying of gold, specifically in China, Russia, Turkey. There's a lot of demand on gold opposite to the US dollars. And the longer, of course, central banks continue to print money and continue to drop rates, gold will continue to appreciate. Gold is a bullish trade. If we look at the weekly chart here, I believe that gold will reach its all-time high in 2011 and surpass it. We might experience a little bit of resistance when we reach the 2012 highs. That would be an opportunity to buy gold. I think gold will march to all-time high. Here is another story about precious metals. Silver up 7% today on an absolute breakout and a tear. Now, combine all this information. The VIX refuses to go down. Gold catching a bit. Silver catching a bit. Yield hunting in the market. Does this sound like the formula or the recipe for a market that will go to all-time highs and rocket past all these concerns? Or does it sound like a defensive strategy and formulation prior to the downturn on the stock market? I think these moves are bearish. You have to pay attention to these indicators. Nobody's going to come at your door, a knock, and tell you, hey, the crash will happen in about 5 days. Please sell your stocks, buy some protection, and buy some puts. It doesn't work that way. The market keeps going up and up and up. You have the fear of missing out. You hop in the trade, then they pull the rug on your head, and the crash happens fast, quick, violent. Let's go back to the cues and conclude this video. Tomorrow is an important day. Tesla will report. Tesla is very, very important. If Tesla crashes, that will crash the momentum and the energy in the overall market. If you own Tesla shares, please go and watch the video that I released earlier today about a trade to protect your shares from a Tesla downturn after the earnings announcement. You have 1 day left to conduct that trade, so please go watch it. Another giant in the NASDAQ, Microsoft, will report tomorrow as well. Microsoft been on a tear since the beginning of the week. It will need massive good news to continue the rally. We need to see the Azure business growing and the guidance for the Azure business being revised upward. Otherwise, all bets are off. Microsoft will start selling off, and so will the Qs because of the weighted average of Microsoft in the Qs. Now you're looking at a chart of the ES mini futures, the continuous contract that tracks the S&P 500. Look at where we are. We're past the consolidation box. We broke out, and now we're struggling to break through the resistance level that was a support before in the market, very important level in the market. Usually they don't make it easy for you, right? Every trader is expecting a pullback from the double top. So what do? They peek through the line, and they suck as many buyers, as many bulls as they can, that, hey, the double top didn't work, we're breaking through the resistance, we're going to all times high, and then they pull the rug and crash the market. It's not a prophecy, of course, but keep that scenario in mind. A lot of trickery is going on in the market right now, and if you're not careful, you will get slaughtered. Like I said, the best approach, take your profits, grab a big bag of popcorn, sit down, watch the show, raise as much cash as you can, and just sit down and enjoy. If you found the information presented in this video helpful, please subscribe, press the like button, the notification button, and follow me on social media.